Last month, I made $7,897 US trading this one simple strategy, and in today's video, I'm going to explain the entire strategy from A to Z, step by step. Now, before you think this is just another YouTuber hyping up his strategy, no, I am not. This is a simple, repeatable process that you can copy as well, and I'm about to walk through it step by step. Now, as you can see here, I have actual screenshots of me taking the positions. Now, by the end of this video, you'll have a clear understanding of how you can take trades using this strategy as well. You'll understand exactly where I place my stop loss, my take profit, and my entry, and you will be able to pass prop from challenges using this strategy and the risk management that I explain in this video. We're here on the daily time frame on USD CHF, and I'm going to be running you guys through the entire trade breakdown from start to finish. And we're going to start by writing down the overall confluences that I use to take this trade. Now, the first piece of confluence that we love using is market structure. Now, when we start with market structure, we need to understand that there are two forms of market structure, with the first form of market structure being the overall outer swing structure. So what we have here is a swing break in towards the downside. Now, swing structure is nothing more than looking at the overall market structure in regards to the swing. So what we have here is a strong impulse down, we have a big swing up, we have a strong swing down, we have a big swing up, and we're looking for potentially the next swing back in towards the downside. Now, after understanding that we had a break of market structure here, we can then draw in our overall swing high, which is this high over here. We can draw in our overall swing low, which is down over here. Now, what you want to do is every single time you view a chart is write down in what phase you are in of the market, because the market consists of two different phases. We have the so-called impulsive phase, where the market is impulsing in towards the downside, or obviously in towards the upside, and we have the overall pullback phase, which is the phase where we wait for a pullback before then looking for the next impulse in towards the downside. Now, the overall goal of the game is to be inside the green phase, which is your impulsive phase. That is the overall main goal, because in the overall P phase, so the pullback phase, the market is pulling back, so you don't want to get into a short position. But when the market then enters the overall green zone, the impulsive phase, you want to be in that short position, because we expect the market to move very rapidly into a certain direction. So what we can see here on the chart is that we had the overall green phase in towards the downside, which was our impulsive phase. Then here in the middle, we have our overall pullback phase, which is this orange zone over here. And now we are back within the overall green phase, where we're looking for the next downside push. So if you were to look at this from a market structure perspective, we have a push down where we broke market structure. We saw a pullback in towards the highs, and we're now looking to see the next impulse in towards the downside. So this is part number one. We understand that the overall swing structure is bearish. However, within market structure, there are two forms of structure. Number one is the swing, which we just discussed, and number two is the fractal structure. Now, with fractal structure, we look at the overall individual candlesticks. And when I say individual candlesticks, what we look at is, for example, here where we get a break of structure in towards the downside, this is the swing high, and this is then the overall swing low. And just like looking at the overall impulsive phase in towards the downside, the two bearish candlesticks here, that was the impulse in towards the downside. Then the two green candles that we've seen over here, this is the overall pullback phase, and now we're looking for the next impulsive phase again in towards the downside. So this here is the overall fractal structure. So we understand that the market is now coming into an area of interest, because when we look at the second point of confluence, we look at supply and demand. Now, supply and demand is fairly simple. All you're going to be looking for is something called a buy up before a strong sell down. So what we have here is a buy in towards the upside, and then a strong sell down, breaking market structure. And that makes the overall buy before the sell an area of supply or an area of interest from where I want to look for a potential short. Now, if we look to the left, for example, here we have a buy up for a very strong sell down. Therefore, that is in an area of supply. We expand it to the right, and what can we see? That is the supply zone from where the market starts pushing in towards the downside. Now, enough colors drawn in. Let's keep it nice and simple again. We're going to focus on the market structure, where we understand that the swing is in between this high here and this low over here. Now, looking at this area of price where we currently are, we understand that the fractal structure is bearish, as we have this supply zone here in control, with the fractal high being positioned here and the fractal low being positioned over here. So when we look at market structure, we understand swing is down, fractal is down, Supply and demand is down as well, as we currently have a supply zone here in control, and we are also coming from this older area of supply as well. So both the swing supply and both the fractal supply are both bearish. If you want to learn more about this strategy, make sure to click on the link in the description of this video. There's a link to our free Discord there and to a form for if you're interested in joining daily live sessions with myself and the team, where we explain our exact bias and potential trades that we are looking to take. Now, we move on to the third piece of confluence, which is liquidity. So when we look at liquidity, what you want to pretty much be looking for is something called a bump in the road. And the easiest way to identify this is to go to our entry time frame, which is going to be the 4-hour time frame. Now, again, I can go all into market structure, but by looking at this chart, you can very simply see here that we have a break of structure in towards the downside. This here is the swing high. This down here is the overall swing low. Now, within, again, the overall impulsive phase, before getting into the new impulsive phase, we need to see liquidity get taken. So what we have here is a liquidity high. Now, this here is liquidity, and we wait for the liquidity to get taken to then look for the next short in towards the downside. So what I'm going to do here is, again, get these confluences back for us, and we're going to look to identify the trade using the 4 simple confluences. So again, based on the overall market structure, I understand that the overall swing is bearish. Also, if we look to the left, we can clearly see that the market has been swinging in towards the downside through lower lows and lower highs. And all we're simply looking to do here is establish a new lower high to then form a new lower low. Now, the market comes into the liquidity high. So again, we have the third piece of confluence. The overall swing structure is bearish. So now all we're waiting for pretty much is for the fractal structure to shift bearish as well. And we're looking for the fourth piece of confluence, which is the PVD. Now, the fourth piece of confluence is the PVD indicator. Now, the PVD indicator is very simply said just a Fibonacci retracement tool where we look to identify the 0.5 fib. These are the current fib settings that I use for this indicator, and all we are actually looking to do here is for the market to align and retrace into the 0.5 fib at minimum, because everything above the 0.5 fib is premium, and from the 0.5 fib we are happy to look for sells. So what we have again are all 4 confluences except for the fractal structure, which is now our confirmation that we're looking for to understand that the overall pullback phase again, so this orange zone here, is over. Because when do we understand that the overall pullback is over and that we're now ready to go into the next impulsive phase? Because again, we have the I here, the impulse, the P of pullback, and now we're looking for the next impulsive phase. Again, I phase, we want to see the fractal confirmation together with liquidity. These two things help us understand that the next impulsive phase in towards the downside is ready to commence. So what I see here is that price comes into our overall liquidity high. Now, what happens? The market makes a fractal structure shift, because if we just clean up our chart a little bit here, you can very clearly see here that we have a break of the high in towards the upside. And here we also had a break of the high in towards the upside. So what's happening is a push up, a push down, a push up, a push down, a push up. And then this low over here that broke this previous high then gets broken in towards the downside. Now again, remember, how do we identify supply? We look at the buy before the sell. So what we have here is the buy before the sell that is in control. And from this point onwards, we can then place our sell limit with our stop loss above the high, targeting a new lower low for a 1 to 3 risk to reward. Now, as you can see, we have all 4 pieces of confluence. We have the overall swing structure, which is bearish. We have the overall fractal structure, which is bearish. We have the overall supply that is in control. Remember, the overall buy up before the sell down. That is our supply zone that is in control. We have liquidity in the form of this little bump in the road here within the overall impulse down. We've taken out liquidity, and we've retraced into premium pricing, and we have again the fractal confirmation after taking liquidity, tapping into supply and coming into premium pricing. So from that point onwards, you see the market retests our entry to absolute precision and then sells off into RTP for a beautiful 1 to 3 risk to reward. And that's how we trade a mechanical FTB strategy using these 4 simple confluences.